Financial freedom is the goal that virtually all of us have in common. It's the idea of having enough personal wealth from savings, investments, and cash on hand to afford the lifestyle that you choose without having to actively work to bring in a regular income. From my perspective, the most valuable benefit of financial freedom by far is very simply time. Time to dive into your passions, whether that's creating art or building something new, or going on that trip without worrying about the office. Time with family and friends where you're truly present and having the ability to be there for the big and small moments in the lives of your loved ones. Far more valuable than the money is the time financial freedom buys to increase life experience. On this channel, I recently kicked off an online income challenge. The idea is to focus on building a digital entrepreneur's skill set that is good enough to bring in some amount of meaningful income. But what is that amount? Well, today we are talking about how much money you need to be financially free. We'll discuss two different ways to think about what financial freedom is and how to calculate your financial freedom number using both methods. Let's get to it. The first and most widely understood method of financial freedom is called the nest egg method. The nest egg method involves consistently saving money and investing it over time to accumulate a substantial amount of money referred to as your nest egg. The goal is to grow your nest egg to a point that it's large enough to support your living expenses for the rest of your life. Once you reach this point, you can sustain yourself by making regular withdrawals from this nest egg to cover your daily costs of living. Both those who work a career and retire in their 60s and those in the FIRE movement are effectively pursuing the nest egg method as their way to financial freedom. To calculate how big your nest egg needs to be, you can use a rule of thumb called the 4% rule. The 4% rule was created by an influential financial advisor named William Bengen, and his analysis showed that a nest egg invested in a certain split of stocks and bonds has a very high likelihood to last 30 years if you were to withdraw 4% of your initial nest egg balance each year. In other words, if you grow your nest egg to $3 million, you would plan to withdraw 4% or $120,000 each year, and you shouldn't run out of money over the next 30 years. So if you said, well, I don't need $120,000, I only need $50,000 each year, then you simply divide that target amount of $50,000 by 4%, and the resulting number is how big your nest egg amount needs to be. In this case, 1.25 million. Now, the nest egg method is generally accepted as your true financial freedom number. Once you get there, you are retired and can do whatever you'd like with your time as long as your cost of living stays below that 4% threshold and your period of retirement is not substantially longer than 30 years. However, the nest egg method typically takes years or decades of hard work and savings, and it's not a very realistic way to think about financial freedom in the context of our online income challenge. So here's a second way, the golden goose method. Now, for those of us who do not remember the fable of the goose that laid golden eggs, it goes like this. There was a poor couple who discovered they had a goose that laid a golden egg every day. And while that was exciting, they eventually grew tired of waiting each day to have one more golden egg. Now they assumed that if they killed the goose, they could get all the eggs at once and immediately have their nest egg. But unfortunately for them, they killed the goose only to discover that inside there was no stash of golden eggs, and they realized they had just destroyed their source of daily passive income. Well, in the golden goose method of financial freedom, we don't have the nest egg. We don't have the huge amount of wealth on which we can live for the rest of our lives. What we do instead is we build up a source or multiple sources of semi-passive income and call this our golden goose. As long as the daily eggs are enough to cover our cost of living, then we are in some sense financially free. We're certainly financially independent from the need to have a job. To understand how much money we need using the golden goose method, we similarly need to understand our cost of living. But I encourage doing this in two phases. First, you calculate what is called Ramen Profitability, and then you move to calculate lifestyle expenses. Let's start with Ramen Profitability. This is a term often used in startups to describe the minimum level of profitability a startup company must reach for the founders to live on with zero luxuries. So for us, it's the minimum level of income required to cover our living expenses if we gave up everything but the necessities of life. Now, this will be somewhat subjective as people have different ideas about what purchases equate to luxuries versus necessities, but you get the point. To illustrate, open up your spreadsheet software of choice and in one column list out your expense categories. An example would be something like your rent or mortgage, utilities, gas, electric, water, internet, trash. We should have a vehicles section, which would include your car payment, gas, auto insurance, maintenance. We need to list out your cell phone, your groceries, household supplies, other debts which could include things like student loan payments, credit cards. And then something that most people forget when doing this is adding in the cost of healthcare. If you have it through your employer now, then they are likely paying for some portion of those expenses. When you quit your job to become self-employed, you now have to pay for all of it. eHealthInsurance.com estimates average monthly healthcare expense to be about $500 for individuals and about $1,200 for families. Now, obviously, these are just averages and your exact coverage amount will be different, but for now, we're just getting an estimate here. Adding all these costs together gives you your monthly living expenses, but we've forgotten one thing: paying taxes. Estimating your actual tax rate is really nuanced and depends on a lot of different factors, which we aren't going to dive into now. This whole exercise is just to get an estimate, so for now we'll simply use an allowance for taxes of 30% of our gross income, and we'll leave it as an adjustable item in our model here. To calculate what our gross income needs to be to maintain our ramen living expense and a 30% tax buffer, we'll take our monthly living expense and divide it by 1 minus our tax buffer of 30%. And now we have our ramen profitability. This is the number that you must hit in our online income challenge to quit your job and be able to survive financially. Now, as far as the tax estimate goes, if you're sitting there thinking, Troy, I have a really good CPA, I know that he could get me down to 15% of gross income, then you would just put 15% here and your target income will update. If you want to take a look at how this would look paying no taxes, just put 0 here, and again, your target amount will update. But obviously, living a life on a ramen profitability budget isn't exactly what we want. So the second exercise to do here is to add a second column in our worksheet accounting for reasonable increases to your ramen budget. For example, you might increase your groceries and household supply estimates. You could increase the quality of your healthcare a bit, and you would probably add other categories such as dining, travel, self-care, subscriptions, gifts, charitable giving, etc. For our purposes, this shouldn't assume a lifestyle of the rich and the famous, just one that provides a bit more mental health than living the ramen life. After you've calculated your new living expenses, you need to add one more category here, a savings category. Now, I'd recommend 10 to 20% of income to be put here, which will allow us to invest our earnings and grow our nest egg. Our savings is calculated in the same way as we did taxes, and with this done, you now have your new living expense requirement. We'll assume the same 30% buffer for taxes, and this number becomes the second target to hit with the online income challenge. It's important to note that what we're calculating here is the distribution amount to ourselves from our online business. In other words, some business profits may need to be reinvested into the business, which means that actual business profits likely have to be higher than what we take from the business. Now you tell me, when you calculated these numbers, was it a bit daunting? For me, it for sure is. It's no small thing to build up a business that consistently pays you thousands of dollars each month. It's not just going to happen because you found out about some new AI tool. This is going to require work, tears, and probably a bit of investment. And it also filters out some of the ideas that you may have heard about to make money online. For example, we're not lining up to do any paid surveys or anything like that. Look, regardless of how you felt after calculating your financial freedom numbers, these numbers are important to have in your mind. When the founders of Airbnb calculated what ramen profitability was for them, they wrote that number down on a piece of paper and then taped it up in the bathroom of their apartment. That way, it was typically one of the first things they saw in the morning and one of the last things they saw at the end of the day, serving as a constant reminder of what the goal was. I am going to do the same, and I encourage you to as well. In my next video, I'll cover some of the skills I'll be working on developing for this challenge and how I'm going to do that. When it's ready, I'll put it here. In the meantime, if you want a reminder of how bumpy the entrepreneurial path typically is, check out this video about Airbnb's journey. And if you want some mental motivation to get you ready for the hard work to come, check out this first video I ever posted here on the mindset of achievement. We'll see you soon.